You're listening to the RITE Retirement Show.
The 70% of people out there listening to the show today are going to need some level of care. It doesn't necessarily mean that 70% are going to end up in a nursing home, but 70% of people will need some assistance out there. The biggest fear is running out of money for the retiree, but what we see is not enough people spend enough of their money.
Chris prides himself in what matters to you. This is the RITE Retirement Show.
Hello, I'm Luann Fulmer, and welcome to the RITE Retirement Show with certified financial planner and financial advisor Chris Wallace, who is also president at WG Financial Group. Then also, of course, joining us from the firm is Graham Bauer. Graham is a certified financial planner, financial advisor, and an enrolled agent at the firm. And they're both here again today to give us some really helpful advice about retirement planning. I always like to start off with our phone number, 256-937-2010. That is how you can reach out to Chris and our awesome team, and you can get in on a complimentary discovery session. You may call this number. You could also text the word visit if you prefer texting, 256-937-2010. You can find us on Facebook throughout the week, WG Financial Group 256. Our motto, plan, retire, play. We'll be talking about that and how you can do all of that. Check us out at WGFinancialGroup.com. And also, this show is available on Spotify and Apple Podcasts. Just search for the RITE Retirement Show. Chris and Graham, so excited to get started with you today.
Yeah, me too, Luann. I'm still, I guess, trying to come back from vacation. I was out of town for business a couple days last week, and then went to the lake over the weekend.
Oh,
so I'm still trying to reconnect my brain.
Get back to reality.
Mm-hmm.
Yeah, we weren't traveling together, but we were both out of town, I guess, this weekend. So it's always catching up at the beginning of the week.
You got to put
I was at Lake Cumberland in Kentucky.
Ooh,
yeah,
nice.
So that was fun.
Was it good weather for you?
Oh, it was great. It was hot, super hot. My friend has a boat, so he was down from Ohio, and that's the best time, to really have a boat is just borrow your friend's boat and ride on your friend's boat.
Exactly.
And then you don't have to pull it out of the water. You don't have to do any repairs.
Right.
Although we did split some gas and things of that nature.
Yeah.
That's the best kind of boat. Yeah, we were wake surfing. I don't know if you're familiar with that. Are you?
I am. Yes, I am. My daughter just did it. She just did it. Yeah.
So it's fun. But as you age a little bit, the balance is not quite there.
Ooh,
I was able to get it. I was able to do it. I didn't look like a pro. I looked like maybe a senior citizen pro on the wakeboard. I fell a couple of times. And one of the times I fell, man, I smacked my head really hard on the water.
That does not sound fun.
Yeah. And I had my sinuses flushed out a couple of times. But
see, that's not fun to me. But
hoping I don't have those brain-eating amoebas.
Ooh, don't even think
Yeah, that's the first thing. That's because I'm a worst-case thinker. I guess that's what makes me, I think, a pretty good planner is I'm always thinking of like really bad things that can happen.
Yeah, worst-case scenario.
Yeah, so we hit the water, I come up, and I'm like, "Ooh, man, I wonder how many amoebas are floating around the brain after that one."
Okay.
I think that's more so the creeks you got to worry about and that sort of things. That's what I've heard. But you hear a story about that every now and then, and it'll really freak you out anytime you get in a body of water that's not like a bathtub or a shower.
Yeah. Oh, my.
Exactly right.
Wow.
So, other than that, I'm great.
Okay. Other than that, okay. Well, everybody put your thinking caps on. Focus. We are back in the real world now.
We are.
So I guess speaking of real, we always like to start off our show with some real talk. And of course, that's some reels that you guys find. And Graham, you have a particular one to share. It's an app about market tips. It's pretty funny.
Yeah. So this is, I've been getting a lot of videos similar to this recently. It's probably because, in doing this, sometimes I'm looking around for something, but sometimes they find me.
Yeah.
And this one kind of did. So, and I'm going to preface this with saying I'm not going to say 100% that this doesn't work for anybody, but it's just another one of those examples of something that is made to sound a lot simpler and easier than it is. So pretty much what this video is talking about is taking your investments and syncing them up with some sort of AI software that basically reads, charts, candle charts, and tells you when to buy and sell different stock positions. And all you got to do is just listen to the AI, and it'll tell you. I know that there are a group of people out there that like to do day trading, swing trading, whatnot. And again, I'm not something I've ever done. I'm not going to say that there has been no one that makes money doing that. However, I think it's one of those things that gets tossed around a lot, and something that you hear people talking about even more when we're in, times where the market is up. So, we're now 3 years in a row, market year to date, it's like 8% or something like that. So we're
real close to that forecasted Chris Wallace number, right?
It is pretty close, but there's the night is still young. But for the last 2 years, double digit returns. This year, we're certainly on pace for it. We'll see what happens. And when that happens, it kind of reminds me similarly of like that 2019, 2020, 2021 sort of gap where, even if there were bumpy periods within that, the market was overwhelmingly positive for a few years, where people, make a few good decisions or brilliant. Well, I don't know if I'd say good decisions, make a few lucky decisions, but also everything's kind of going up. The aggregate market is really going up. And then tend to get a little bit of overconfidence. So, I think that for most people, these types of strategies are, for one, probably just, a little bit lofty that you're going to be able to do that consistently in all type of conditions rather than just when we're having really good times. And two, most people that I sit down with have a hard time, like even remembering to fund their Roth IRA or change their 401k contributions. And so I see some of these and I'm just like, who has the time to be like actively placing 10 plus trades on their account every single day? Even as advisor, we're not placing 10 plus trades on people's accounts daily. There's a passive element to investing that we believe in, and, where there is some rebalancing, some allocation changes, but it's not something where it's like, oh, we're going to buy at this point, but sell at this level. So I think it's one of those things that, again, I'm not saying that it's never worked for anybody on some level. I'm just saying that it seems incredibly time consuming and probably just not sustainable for your average person.
Yeah, I would agree. You touched on every time the market goes up, people seem to get this element of euphoria. I don't want to miss out. I want to ride. And they totally disregard their plan.
Yeah.
At the end of the day, they're back in. It's like this high that people get on because things are going well. And they're like, should we look at AI? I'm getting that question quite a bit. And I think when we look at AI, I don't think targeting one specific company is the best thing to do, because all companies are using AI to some degree, or at least I would say most companies are looking to build in AI within their processes and trying to make things more efficient, like Apple, Google, Microsoft. Those big tech companies are all using an element of AI. So I think the best thing an investor can do is keep the long-term time horizon insight, keep their plan intact, and then stay diverse, because a lot of companies, you're going to get the AI exposure within companies is kind of my point here. The other thing regarding the actual real talk, which it's really funny that we can't repeat some of the language that was on the real talk. That was the funny part. We were like, oh, we can't say that. I don't know if you saw this, but on the company page earlier in the week, I literally posted about something like this. It was okay, so you did see it. Okay.
Yeah, I saw that one as well.
That's probably why it got into your algos or your cookies or whatever.
I clicked on that one and probably watched it, and then you just get down the rabbit hole.
Yeah.
But yeah, I think you see that too with, I think, we're maybe sort of entering into, again, like a 2021 sort of feeling time where, especially if interest rates get cut, where if, money's cheaper to borrow and the market's going up, people get a little bit just looser with what they're willing to throw money at, rather than when they feel, maybe more economic pressure or, stock market pressure. You remember in 2021 with like NFTs and stuff like that.
Mm-hmm.
And we didn't get like a lot of questions about that specifically in our internal client base.
Right.
But I've probably had more people ask about, cryptocurrency in the last 5 months than, in the last really 3-4 years. And again, I think it's just a symptom of, when things are going up, people get that FOMO and they kind of feel like, oh, well, I bought one thing and it went up, so I can probably just pick anything.
Yeah.
And you're right. You can end up just completely disregarding a plan and being like, oh, I'm just going to go all in on this. And that's why I tell people sometimes when they want to do that, just have some play money, some sandbox money. If you got a couple $1,000s, sitting around that you just want to mess around with, that if it went away tomorrow, it wouldn't affect your life at all, then sure, go for it. But with your overall plan, with your retirement, you just don't want to be messing around with things like that.
Yeah, I agree. And then just ask yourself a question. Like when you're talking about all these individuals, companies out there with stock trading software, if they were that good, they would be managing everyone's money,
good
including
point.
Warren Buffett.
Good point.
I mean, more than likely.
Yeah.
I mean, I can't make any guarantees, but if you're that good and you've got this software that really just captures all of the upside, none of the downside, then you'd be managing everybody's money. Everybody would want to invest with that company. And it's just, you don't really see that out there. So I agree with you. Create a sandbox, take some of your excess money that you can afford to lose and really consider it gone. And that way, if you lose it, it's no big deal. So
yeah, I like to use the analogy sometimes when people ask about certain speculative things to just say, hey, we don't do any of that here. We're just focused on the retirement plan. But if you feel like you want to do it, I just wouldn't put any more money than you'd be willing to lose on a hand of blackjack. So I feel like that's a good base point. Just consider it gone. And if, works out for you, great. And otherwise, doesn't really matter too much.
Very good. So this is exciting. Graham, you mentioned that you found that the TSPs, the government pension plans, total $1 trillion in assets. Tell us about that.
Yeah, so as of June 20th, 2025, the assets in the TSP plan now exceed $1 trillion.
Wow.
And I mean, there's obviously a lot of reasons for that, even though the federal workforce has obviously shrunk a little bit in the last 6-8 months. The market has done pretty well, continue to go up. People continue to contribute. But I think it's just a good reminder for federal employees, because I think a lot of federal employees maybe see themselves as like, not in the echelon of people that really need, more tax planning, more, long-term retirement planning. They're like, okay, I got my pension, fairly simple. Where I think this milestone, again, it's just another indicator that federal employees have done a really good job saving, and they're probably, a lot of them are going to have rich people problems too, which are, taxes overall.
Yeah.
So rich people problems.
I think it's a good reminder for federal employees that, if you got a bunch of money sitting in the TSP, which clearly a lot of you do, I forget what, it says actually the average TSP balance is, 100.
Let me guess.
Oh, sorry.
You've already started, so I already heard you.
Okay, wait. So that was all participants.
I'm going to
guess
say
for the first
$637,000.
Well, the zeros are going to bring that average down a lot. So it's 202 among FERS employees. But, within that, obviously, there are people that have just started and don't contribute. So zeros bring averages down.
Let's drop the zeros.
Yeah. But again, those, 202 for all the federal workforce is not bad at all. So I think it's just a reminder that, if you haven't sat down with someone before, if you haven't talked about your long-term plan with your TSP, as it's growing, as you contribute, how you should be contributing, what your options are, and all that, it's just a good reminder that maybe you should look into doing that.
Excellent. Very, very good. Okay. And then now for a little bit of a market update, tell us what's going on. A lot of buzz with everything in the news always. So what's going on with the market?
Yeah. So as of today, since we're recording on Tuesday, it's actually trending down a little bit, but this is right before the Fed meeting that's going to happen, tomorrow and Thursday.
Yeah.
And so just on that note, there will not be a rate cut. So if you're hearing this on Saturday, you will have already heard the announcement, but I'd just like to give predictions that that's not going to happen. So it's like a 98% chance of no rate cut. I think we have a much better probability of a rate cut in September. I think right now the futures are sitting at like 62, 63%. And again, it's too far out to really make like a concrete call like I'm making right now. Actually, the futures are now moves up to 65%. So for September. So I think there's a much better chance of a rate cut then. I also believe that Trump is continuing really to just hammer and lean on the Feds to drop rates. And I think he's probably going to get his way. I really do. Whether he gets it in the fall, Graham, you and I had this discussion a few weeks back where you thought it would be into next year, maybe around the time he exits, Powell, that is. But I tend to think Trump's going to lean on him really hard and kind of force him to do some rate cuts. Again, he did the same thing in 2018, but no rate cut this week. So what do we have? We did have some tariff agreements with other countries. The EU, the United States now have an agreement in place. And then there's been talk of another 90-day pause for China and I think also Sweden as well. So why is that important? It's important because it takes some uncertainty out of the markets. So the more agreements get put in place, investors, we all know at that point, we're like, okay, we kind of know what's going to happen. If you think back to like February, March, April, early April, Trump brings about volatility with the way that he does things. And I know that some people say, well, that's his method. Okay, well, yeah, sure. It's his method. Nobody really knows what he's going to do. And I don't know that he really knows what he's going to do, but he knows where his pivot points are. And I remember writing to our internal client base, because there's certain things I don't really share on the air that I keep for clients of ours. One of the things that I told our client base was there's a struggle, this power struggle between, China and also United States and Trump. And it's basically a little bit of a tug of war. And it's kind of like they're both pulling on a rubber band and one of them's going to let go. Well, right now it's really been Trump that's let go.
Right.
And people can say that he hasn't. And I would say he has because he's paused. And now he's looking at an additional 90-day pause. And the reason for that is because China's not ready to fully negotiate. So right now, China, I would say, is winning the battle in terms of that. But then there's also the element of Trump is wanting to get rates lowered. So I believe that's a focus of his right now. And I believe he also wants to get other agreements in place and let the market continue to run upward. I think, and I've said this before, I said it to our client base as well, the market is his ego barometer. So the better the market does, the better he feels, Trump. And it's good for investors as well. It's good for retirement plans for the markets to do better. So I think it's in America's best interest just for him to chill for a little bit, just let things kind of settle out. Because again, I think he does bring about an element of volatility. I don't know anybody that would disagree with that. I think there'd be a lot of people that would say, hey, I wish you would do things a little bit differently. I wish you'd handle things a little bit differently. But all in all, the market as of today is up about 8% on the year. That's a good thing.
That is good.
Especially compared to where we were at around the middle of April, which was down -20. So we've made quite the turnaround.
See? Yeah.
And it was quick.
Wasn't that about when the talks of the tariffs happened? When people were scared. Yeah.
Yeah. The initial pause.
Yeah.
It basically kind of started on the initial pause. But yeah, it is. I think you're totally spot on there that and for a lot of politicians, I feel like they'll point at the stock market as just the end all be all for how the economy is doing, which is not really true, but it is an indicator, and it's a very tangible one that the largest voting bloc in the United States is usually going to have more impact towards them than others, just because in the in the investment markets and the housing market, the older generations generally just own more assets. So I mean, I think that I do agree with that it seems like to me the pause is probably mostly driven on that and the fact that last time we got into that huge scuffle a couple months ago, that's when you saw that huge drop and the turnaround really pretty quick, honestly, when that stopped. So, I mean, we'll see, but I agree with you. It's things can change day by day, and you're always just waiting to wake up to some report that just totally changes everything. But again, like we talk about, and we're going to talk about more on the show today. Like that's why when the last drop happened with the tariffs, when things are coming back up, I mean, we were not reaching out to clients saying, oh, we got to sell everything right now, or oh, you got to go all stock. Were some opportunities that we tried to take advantage of there. Yeah, ton of conversions, try to deploy some extra cash. There was a lot of stuff like that. But as far as changing the whole scope of your retirement plan, was not conversations surrounding that.
No, not at all. And just as a side note, I actually just remember this is a little bit off topic. So that's kind of the market update, basically. No interest rate cut. Markets continue to do pretty well. I saw a stat that 65% of Gen Z considers themselves content creators.
Oh, yeah.
So the way that I looked at that, when I read that, I was like, you got to be kidding me. You mean 65% of our younger generations thinks they're content creators? And maybe they are. But I remember when I was young and I thought I was going to play in the NBA. Matter of fact, I was just so sure of it in my head. It just reminds me of that. And our Gen Z, are they thinking about that? Are they going to become a content creator? And I think to become somebody that's really famous to generate lots and lots of revenue, I mean, that's a very low percentage. I don't know what the percentage is, but I would say it's probably under 1.5% of quote unquote content creators that become really famous and make, a 7-figure living at that point. Not saying you can't make some money, but maybe not enough to support a household on. So anyway, I just found that kind of funny. I just want to throw that in there.
Interesting.
Well, would you consider me a content creator?
You are right now, buddy. You're creating content on the radio right now.
Live on the air. Yeah.
That is funny.
You're not making 7 figures though.
No, sadly.
Sadly.
Maybe someday. But the that is interesting. I mean, I think that kind of makes sense. I think that kind of checks out with how but the distinction would be, like you said, how many of that would consider themselves like content creation a career versus just being a content creator? Because it's so crazy how easily you can just upload anything online really and share content. It's even my wife has people in her workplace that will make like, I don't know if it's TikTok videos or what it is, but like about their day in the workplace. I'm sure, Luann, you've seen that with people. But we don't have anybody in our staff that's done that I've seen. But but you'll see
money.
Yeah, if you can make money for it, I don't want to be in the
videos. I'm like, I don't know what they're doing, how they can make $3,000 in a few days. It's crazy.
Yeah, it's wild. So anyway, I just wanted to throw that in there. So I guess to kind of wrap this segment up, even though there are a lot of supporters of Trump, one, he's very, very chaotic. And so if you're not a supporter of Trump and you see him as just massive chaos, I would agree with that 100%. And I would just say focus on things that you can control. So you can control how much money you save. You can control your financial plan. You can control getting out of debt. The new tax bill, the OBBB bill, as we like to call it, has been passed, and tax code or tax rates are now permanent until they're not. We've talked about that, but utilize that. Work with somebody who can help benefit you financially, and just disregard all of the other noise, because a lot of times, and there are a lot of Trump supporters out there that like his policy, but not the person, right? So just ignore all of the noise and just celebrate in some of the things that are happening in terms of deals with other countries. It just seems like there's a little bit less conflict happening in the world for the most part. I think we still have Russia, Ukraine yet to work on, but just celebrate some of the wins that are there and just ignore, because there's bad too. There's bad. So just kind of turn off the noise and on the negative and just focus on the positives right now, because personally, I'm very optimistic about the economy. I do think the missing element right now is lowering rates. And I believe that if and when the Feds do lower rates, I think it's really going to spur the markets. And I think we're going to see a pretty good run. I'm not going to say it's going to be like a .com boom or anything like that, but it's definitely going to help fuel the markets to loosen that monetary policy up a little bit.
All right.
Yeah, I think then I'll let us move on.
No,
but
it's okay. Go
I
ahead.
agree. There's so much noise out there, and I just always like to remind people, no matter who the president is, who's in Congress, all these things have terms to them. I guess Congress doesn't really have term limits, but at least on the presidential side of things, your retirement, if you're a young person, you got a long, long ways to go. There's going to be many different presidents, many different market type conditions, many different tax policies. And even if you're a retiree, there's still going to be all of those different things, most likely, if you're talking a 20, 30-year retirement. So, it's just important to focus on the long term.
Yeah, it is. And again, just going back to the tax thing, man, while it's low, take advantage of it. I mean, take advantage of it. There's a lot of things that can be deducted now that you're only going to have a few years to be able to do it. Take advantage of those things if it's right. and then utilize the tax code to your advantage and your family's advantage to help make your situation better. We talked about the tax rates being permanent, but I just can't see them. I'm 52, so, given life expectancy, probably 85. I hope I'm longer than that, but that's another 30 years. I don't see these tax rates in 30 years. I don't see them in 10 years. So take advantage of them while they're lower. And then also understand that there's another hurdle that nobody's talking about right now. We've talked about it a lot on the show, but the Social Security funding hurdle is coming up. And that's going to be a big conversation for Congress in a few years on how do they address the shortfall. And I'm of the mindset there's going to be a payroll tax increase. That's just what I personally think. And I think it'll be, and we've talked about this a number of times as well, that there'll be some sort of a combination of probably payroll tax increase and adjusting the wage cap and maybe inching back full retirement age a little bit. That could be in there as well. So there's a number of things that I think can be done, but that will also impact the amount of money that you bring home. Because today it's the same as it's been since like 1990. But I would look for that to change in the next 4 to 6 years, because something has to change, or else there won't be benefits enough to support the 100% of what's coming out of it right now. So we still have another big hurdle to cross there.
Yeah, and that'll probably be addressed at the last minute, but a lot of that stuff is probably going to hit around the same time. Too. So, we'll see. It would probably be a better idea to kind of ease into that sort of thing. But, that's not typically the way that a lot of the policy operates. But, just to kind of clarify, not that it really needs clarification, but, taking advantage of current tax laws is, when you say take advantage, that can almost sound like a bad thing, or negative or positive, depending on the context. But, in this context, it's like, these are the laws. This is what you can legally do to save yourself a little bit more money, put a little bit more money in your pocket, and potentially, hedge a little bit against, things like, like tax rates going up, like the FICA tax increasing a little bit. That would genuinely make an impact, probably on the same level, if not a little bit more than your federal tax rate, because FICA taxes apply to pretty much everything. So, that's going to, again, it's not going to like bankrupt everybody, but, 1% more in your pocket today is 1% more in your pocket today that you might not have.
What's funny, Graham, on that note, we're talking about Social Security and the wage cap. Why don't they just go ahead and pass law today to raise it? I don't know.
Doesn't make any sense.
It makes zero sense.
Or like phase into it over, we could phase into it over 5 or 10 years even to kind of lessen the blow.
Let's just use the rules they run on. Tax the rich. All right. Well, there you go. That taxes the rich, right? You raise the wage-based cap. They pay into Social Security a lot longer, maybe indefinitely if they were to take it all the way off, because you do for Medicare. So part of me is like, okay, this is a way to raise that, and it is going to impact people right now that make more than roughly $180,000 a year.
Yeah.
That would be the rich, the wealthy. Why not just go ahead and do that now so that more funding starts to, fund into Social Security? It's beyond me why somebody won't do that right now.
Yeah. The only explanation that I could have is just that it doesn't have to be done today. It would be better for it to be, but it doesn't literally have to in order for Social Security to stay solvent. So, people aren't going to throw those bills on the Senate floor. But I'm sure there are bills on the floor that are just going to take 6 years to actually ever get voted on. But it is frustrating sometimes. But, at the end of the day, it will get done. It's just, like we're saying, probably going to be more sudden than would be beneficial.
You know what else is frustrating? They were out of time for the first half of the show. So it's been great. If you're catching us on the way to church, you can hop out to Apple or Spotify and listen to the whole episode. We appreciate you listening. Give us a call for your discovery session, 256-937-2010. Again, the number's 256-937-2010.
Market fluctuations can be unsettling, but a resilient plan can help maintain stability. Discuss how you might fortify your retirement strategy with Chris Wallace. Text VISIT to 256-937-2010 today to begin. Remember, text VISIT to 256-937-2010.
Are you a federal employee feeling pressure from the early retirement offers like VERA, VSIP, or the Deferred Resignation Program? Recent government initiatives have introduced significant changes to federal retirement programs, making employees feel pressured to consider early retirement or face potential layoffs. At WG Financial Group, we help guide federal employees through these uncertain times. Our team understands the complex federal retirement systems and can help you make informed decisions. Call 256-937-2010 to schedule your complimentary discovery session with us today. We'll help you assess your options and create a personalized retirement plan to help you feel more confident. Visit WGFinancialGroup.com or call 256-937-2010 to book your session. Firm is not affiliated with the U.S. government. Investment advisory services offered through AE Wealth Management, LLC, an SEC registered investment advisor.
If lingering doubts like, have I saved enough? Or will my retirement funds endure? Are on your mind, it's time to consult with Chris Wallace. Text VISIT to 256-937-2010. That's 256-937-2010 to book your appointment and get the answers you need.
And we thank you so much for joining us today. You're listening to the RITE Retirement Show. I'm Luann Fulmer, here with Chris Wallace, president of the firm WG Financial Group. He's a certified financial planner, financial advisor. Graham Bauer, also with the firm, a certified financial planner, financial advisor, enrolled agent at the firm. And when you go in and see Chris and Graham and the team, they're going to take you through what is called the RITE retirement process. You're going to hear us talk about that. It is a plan for your retirement so that you can retire and then play in retirement. Our motto, plan, retire, play. That is what they will always say. You've got to have a plan as you start anything. And with retirement, it's the same thing. Plan it out, and they can certainly help you do so. WGFinancialGroup.com is the website. And remember, catch this show on Spotify and Apple. Okay, Apple Podcasts, just search for the RITE Retirement Show. So, all right. So happy to have you along with us today. I want to kind of continue with the talk about tariffs. You know, it's kind of been exciting seeing President Trump in Europe and the European Union and all the changes happening. And so these changes can kind of shake up the market a bit. I want to go with what high net worth listeners need to be thinking about it when it comes to keeping up with their retirement plans, making sure they're staying on track during times like this, Chris.
Well, I think when it comes to just tariffs in general, number one, it can create market volatility. And we kind of talked in the first half of the show where, back in April, there was a tremendous amount of volatility. And we're definitely not market timers by no means. But if you were paying attention in April, there was a good opportune time to Roth convert money while the market was off, roughly 20%. Now, you might not have hit the exact bottom, but if you had caught it at 18% down, then that was a good deal to be able to Roth convert, and then the bounce back would have all been tax-free. The way that I looked at it was very simply, the market's down. It's also very scary because you're like, oh no, it could go further. The way I look at it was if I walked into like a department store and I saw a shirt that was 20% off that I really liked, I'm probably not going to wait for it to go to the clearance rack because, that's my favorite place to go.
Right.
Is to, go see Clarence, the Clarence rack. But if I really liked the shirt and it was 20, let's use another analogy. I like sport coats. If I saw a sport coat that was 20% off that I really liked, I'm probably going to buy it. And that's the same way that I look at opportunity in the stock market. If the market is down 20%, Graham, you mentioned having a little, maybe it's time to deploy a little bit more capital. Maybe it's time to Roth convert. Those opportunities presented themselves. And if you were paying attention, especially if you're a high net worth person, you could have potentially helped yourself avoid some taxes, later down the road. And I think now, even now with the market back to where it is and at an all-time high, I definitely think it's still a time to take a look at your portfolio, take a look at your strategy that you've had designed or built, or maybe you don't have one. Maybe you just have a lot of money and you're like, I don't really know what to do. I know I have enough to make it on. Maybe look at the efficiency of that money as you start to move forward.
Yeah, I love that. Very, very good. Now, what about people who have more complex portfolios or tax situations? Tell us, Graham, are there some specific challenges they need to be aware of, or maybe even opportunities?
Yeah, well, similarly to what Chris was talking about a second ago, and even jumping back to what we talked about in the last segment, if we're staying on the high net worth topic, there really is a unique opportunity in these next couple years to be looking at, a multi-year tax planning plan for your funds. And when I say that, I'm not just talking about Roth conversions, because we say that a lot, and they are super important, and that's why we talk about them, and that's why a lot of people want to come in and talk about them and look at those plans. But there's more to it than that. If someone is of the age where they are 65 plus, they have that extra $6,000 bonus deduction depending on their adjusted gross income that's going to be around for the next couple of years. They have a higher SALT deduction if they still have a mortgage that they can take advantage of. And, if you're converting, you might have some extra state taxes that you can deduct as well with that. So there's, some opportunity there. And then, there's always kind of opportunity too on the non-qualified side of things to say, hey, well, capital gains rates, those haven't changed in a long time. But even still, as the market is increasing and as your portfolio increases with non-qualified positions, those capital gains grow. It'd be a good time to say, how can we start diversifying potentially out of this over the course of a few years, maybe trying to utilize a 0% tax bracket or just the 15 or however that looks, or doing some charitable giving strategies. So there's a lot of opportunities depending on your situation. It could be Roth conversions. It could be diversification in other areas. It could be how you're contributing towards your retirement based on how current tax laws are, how they will be in the next few years. So, I think that there are a lot of opportunities. It's just a matter of, tailoring that to your specific situation.
And then, Chris, what about any proactive steps people could be taking to protect what they've worked so hard for? What could they be doing?
Well, obviously, as the closer you get to retirement, I think you have to be careful about returns in general.
Mm-hmm.
I was kind of just reminding someone of that today. I was actually communicating with them via email, one of our clients. And, Graham alluded to earlier in the first half of the show about the euphoria that happens when the markets are doing well.
Yep.
And then the other thing that I see during times like this, I don't think I mentioned this in the first half, is everyone tends to become an expert at that point. They're like, oh, why don't we look at, this particular company or that particular company? And I mentioned AI and things like that. But everybody then becomes an expert, and they're, to Graham's point, willing to take unnecessary risk that they weren't willing to take, 2 years ago. But now everything's good, and the whole turtle comes out of the shell kind of thing and wants to cross the road. Meanwhile, those cars are still there, and those market forces in retirement are still there for the investor today and the retiree. And I just reminded this individual, I just said, hey, you have a plan. And the plan is working according to plan. And why would we want to change at this point? You kind of have to ask yourself, am I being greedy? And I think the days for most retirees, not all, this is not hey, this is everyone kind of thing. But for most retirees, the day of picking that one stock that's going to blow up, and use NVIDIA, for example, the days of picking the next NVIDIA for a retiree, for most of the retirees, is kind of gone. You don't need to take that type of risk. Most have a plan, or let me say it this way: most should have a plan, and you don't need to do those silly things. In my opinion, you have a plan, you build a plan, and it's designed to get you through the end of life and end of your spouse's life, and pass on the legacy to your kids, whatever the goals are. And there's just no need to take that excessive risk. But I think having a diversified portfolio, to answer your question, is one way to protect your portfolio, especially when things get a little crazy. And, obviously we're biased because we are financial advisors, certified financial planners. Actually, Luann, I think we're the only show maybe between here and Birmingham, maybe in Birmingham as well, that has 2 CFPs on the air at the same time.
That's cool.
So yeah, and actually, I just like to plug, we are the longest running independent radio show here in Huntsville. So that's kind of nice. But with that said, I think again, we're biased, we're financial advisors, working with a financial professional, whether that's us or someone else, to make sure that you're on track. And I know that we've had people come into the office here recently for a couple of reasons. One of those is simply this. I know this is a husband talking. I'm not going to live forever, and I want to make sure that I have a relationship with someone so that if something happens to me, that my wife is taken care of. Because I do everything currently. Again, I'm still the husband talking. And my wife has no idea what to do if something happens to me. So I want to make sure we have this relationship started, and they're open to that. And always, I shouldn't say always, compliance will nip that in the bud. A lot of times I'll say, as we're talking to this family, they've done a really good job getting to retirement. But there are so many moving parts in retirement, from retirement income decisions, investment decisions, tax decisions, estate decisions, that oftentimes we are able to uncover some opportunities to help the family make even better decisions. They've done a great job. They've been saving. They've come in and said, hey, I want a relationship. And part of them in their mind is like, do I really need this? Meanwhile, through our process, we uncover 2, 3, 4 different little things that can really enhance their entire family situation. And then the viewpoint from them changes. They realize we're not brokers. We're not an investment house. We are financial planners, and we look at everything. And a lot of times we're able to kind of help, make the plan a little bit better.
All right. Excellent. If you're just joining us, we're discussing how global trade policies like tariffs could impact your retirement. So we've kind of talked about how, the main thing is, you be flexible, have a flexible, forward-thinking plan, plan for it. That's what's going to happen. That's what it takes to preserve your wealth. Graham,
sorry, Luann, you touched on a forward-looking plan.
Yeah.
That's crucial.
Yeah.
I mean, that is so crucial. And, that just kind of, we were talking about taxes and things like that earlier, that I think as you look forward, you have to, even though the tax rates are permanent, I think you have to almost think that they probably won't be. So that would be part of like a forward thinking plan when it comes to stuff like that in your retirement plan is, are there things we can do today? Can we max out a marginal bracket on a conversion? Can we stay up underneath a certain IRMA limit? Can we get below the net tax modified adjusted gross income limit that causes additional taxes on interest and dividends and capital gains, things like that? Your plan should always be forward looking. And I do think as an investor and someone listening to the show, and we're on TV, so even watching the TV show, I think the average person is really good at looking backwards. And we like to say that you don't drive your car by staring constantly in the rearview mirror. You use the rearview mirror for reference and to see if things are behind you. In the same way, you should do that with like looking at market returns. You shouldn't assume that the market's done this the past 10 years. It's going to do exactly that in the next 10 years. You should always be looking forward and watching out for objects that are in the way. And you got a lot of them in retirement, that's for sure.
Right. And get guidance about it. Don't do it alone. And that's why we do this show, because, we're offering a chance for you to go in and get a discovery visit, take a look at your plan. Chris and our team at WG Financial Group can certainly help you do that. We're offering a discovery session. So all you have to do is pick up the phone and call 256-937-2010. Call. You can text the word visit if you prefer texting to get on the calendar. That way, guys, it's complimentary. And you can meet these Philly guys that you hear on the radio every single weekend. And they will take you through the right retirement process. And it'd be a great thing for you to see what they do with each individual person or couples that come through the office. So check us out at wgfinancialgroup.com as well.
Can we talk just a second about the RITE?
Why don't we? This is a perfect time, Chris. Yeah.
Yeah. Then you can move to Graham's next question.
Yeah.
There. So I know he's antsy to really get into this. So, but just real quick on the
my seat.
Yeah, on the RITE. So retirement income is the R, investments is the I, tax efficient strategies is the T, and then E is estate and legacy planning. We have a strong belief that if you address those 4 areas in retirement, your success rate, we feel, becomes a lot greater because you're addressing things within the retirement income part of our planning, the investment part, your risk, your fees, your charitable giving under the taxes. Are you making the right contributions to the right accounts? Are you in the NIT, modified adjusted gross income area. Is there something you can do to get below that? IRMA, all the things in the tax area, and then the estate and legacy, just making sure that the estate that you've worked really hard to build is protected while you're alive, but then also that it passes on in a really tax efficient manner and really ease as well. You want it to be, at least I do. I want my estate to pass on as easy as possible so that my kids aren't having to look around and find stuff and maybe pay more taxes than they really need to pay, and just making sure that the ease is there on the estate side of things. But that's kind of what the RITE process is.
Right. And so when people come in and visit with you, the first thing you do is kind of help them look at what they have. Tell us about what that initial visit is like.
Oh yeah, I didn't know we were going to go there, but yeah, we will. So discovery session, easy. It's a simple meeting that lasts about an hour and 15, hour and 30 minutes max. And it's just an opportunity for us to get to know you a little bit better. You can get to know us a little bit better. And what we do is we end up sending information or a bullet point list of items to bring. You do your homework, bring that. The meeting's super efficient. We figure out if we like each other, if we can help each other. And if that's the case, we set up a second meeting after that. So it's a real simple process. You guys actually do most of the talking. I actually don't do a lot of talking in that meeting. I just facilitate the meeting with some sheets that I have to capture some information. And really the job is just really to pull information out of somebody sitting in front of me so I can understand how we can best serve them.
Yeah. I sat down with someone for a second meeting after our discovery session a couple weeks ago. And the first thing they said to me was, I just want to start by saying, I'm sorry, because I feel like I talked the whole time last time and you didn't. And I was like, well, that's kind of the point of this meeting. We're asking questions. We want to get to know you. Obviously, we're not just sitting there silently. No. But, sometimes the questions that we ask, really prompt, a lot of information from, from the prospect that's coming in, and a lot of history. I mean, people live a lot of times a long life even before they've come in to see us. If you're in your 50s or 60s, there's a lot of history there with, you, with your family, with your financial situation. So, it's really just trying to learn all about that. But I thought that was funny. I was like, no, don't feel bad. That's why I was asking you all those questions.
Exactly. And the whole point is we want to make sure you retire, right. And that's why we do this show. But that's also why we offer a chance for you to go in and meet with these friendly guys and meet the crew at WG Financial Group, because they would love to guide you. So now, okay, I want to go back to, Chris had mentioned taxes. Okay. Looking forward, have a forward thinking financial plan. And one thing we have to pay attention to as, people approach retirement are having tax efficient strategies. And so with all these changes that are taking place in the big, beautiful bill, tell us, how we should be approaching our tax strategies.
Yeah, we've hit on this a lot, but I would say that this is the time to be thinking about your tax strategy. This is the time to be reviewing it. This is the time to maybe be a little bit more aggressive about it, because like we've said, many times on this specific show, between world events, between, whatever's going on in Congress or the White House, between tax law, anything else, it's just important to control what you can control. So if you are, in a place to say, hey, I want to really explore what my options are for my tax planning, for my tax diversification, for my actual portfolio diversification, for how I'm investing, where I'm putting money, how I'm generating interest, any of those type of things, I think it's a really good time to start doing that. It's very common for people to say after, something along the lines of, after we've gone through the process of, I wish that I had started thinking about certain things a little bit earlier, whether that's tax planning. I hear that very commonly about like Roth IRAs, Roth 401ks, and then that's a long conversation. And for most people, that hasn't even been around their entire life that they've been saving. But, I think that even if there were some things that 20 years ago you could have done a little bit differently, this is still a very good time, with current tax laws, with current conditions, to say, hey, let's sit down and talk a little bit more about this.
It is. Just something that popped into my head when you're talking about Roth. So Roth hasn't been around that long. It's been really since the late 90s. I don't think it got introduced into 401ks till like 2006. Do you think, this is just a do you think question to Graham, do you think people were just a little skeptical and they didn't put enough money in? Because I know that you've heard this a lot, that a lot of people are like, I wish I'd have put more money in a Roth IRA or Roth 401k back in the day. Do you think there was a lot of skepticism and that's maybe why people didn't do it since it was new?
Yeah, I mean, I wonder. Obviously, I wasn't one of those people that was saving at the time where it originally came out. Yeah, I bet you there was some skepticism over, is this really going to be tax free, or are they just going to change the laws in 5 years? And I would have been better off to just go with the traditional IRA. And there was probably also a lack of education about it when it first.
Probably.
I mean, that was pre-internet era, so information traveled a lot slower, and through a lot less, I guess, efficient mediums like newspapers and the 5 o'clock news and whatnot. So I bet you a lot of people, because nowadays the HSA has been around for how long? 15 years, 17 years, and a lot of people have still never heard of it. When I bring
and
it
still
up
skeptical.
And still a little skeptical of it. So it probably just takes a while, but no, I bet you there's something to that.
Yeah. I just wondered. I was just something that popped in my head as we were talking about it. So sorry, Luann.
No, that's
messed
okay.
up your flow.
It's no flow. It's okay. So what would you say, Chris, for those who are ready to reevaluate their retirement strategy?
I don't think there's ever a bad time to do that. So I think some people are waiting on certain events, and I'm trying to think of an analogy. My wife says I can make an analogy about everything. So here we go. Sometimes there are people out there that want to get life insurance and they say, you know what? I'm not going to do the application. I'm going to lose 15 pounds first.
Mm-hmm.
And then that 15 pounds never comes off. You've gotten 2 years older and maybe you put on an additional 15 pounds. Well, the same thing can be said about a retirement plan. There's really not a bad time to go in and have someone take a look at your plan. And I say it, and I mean this with all sincerity. Like, if it's us, great. If it's not, it's okay too. My job, and I'm sure Graham feels the same way, is we want to just provide information to help people's lives better financially, especially in retirement, since that's our focus. But going in and getting that done, getting that examination done, getting past some of the uncomfortableness that comes with it, getting past some of the trust issues, because there's a lot of trust. And believe me, it's really funny, but my wife will tell you, I have major trust issues with things, and I vet things, and I get it. So I completely get it. But again, whether it's us or somebody else, don't wait until quote unquote the right time. Start verifying your plan now. I would find somebody that you want to work with. Most investors, there's plenty of studies out there today that the average investor out there today, individual investor that is, underperforms the index by quite a large margin. And so one of the biggest things that I think a lot of people worry about is working with somebody and paying a fee to work with that individual or that firm or whatever. And they're so caught up in the fee that they're totally blind to other issues that they have within their financial plan. And there's been people that have come in the office with us, and I think our fee is incredibly competitive. That's just my opinion. I understand. I know what others charge in the area because I do my homework. But some of the people that I've met with through the years have been so focused on the fee, and they have other like big problems in their plan, and they don't get them fixed because they're so zoned in on the fee. And the other areas that we've identified, they're not even addressing them. Like here's an example of things that I've seen. I've had families, individuals, and I don't even know how many, too many to count. I'd have to pull off my shoes and then some to count all of the times I have probably run into a portfolio over the last 14 or 15 years that is just built with a ton of high cost mutual funds. And let's say that average internal expense ratio across all their funds is 0.8%. So at that point, you're nearly 1% in mutual fund fees, and you're worried about paying an advisor, say 1%, and you're getting like no value, no face-to-face value, I should say, from the mutual fund managers. They're charging a lot for their funds. You've got a high expense ratio. And meanwhile, you go to talk to an advisor again, whether it's us or somebody else, and you're worried about paying the advisor 1%, and you're totally overlooking you're paying 0.8 in a high cost mutual fund portfolio, and you're getting like no value like out of that other than just investments that may or may not be performing to the level of your satisfaction. So sometimes you can be your own enemy in that case. We're here to help. That's
right.
We're here to help those who want to be helped. We don't want to, obviously we can't help those that don't want to help.
Yeah. Can I give an analogy real quick?
Yeah, go for it. I spurred the analogy train here.
So I was out of town over the weekend helping both go to a little burial and also helping my parents clean out my grandpa's estate. And he wasn't a rich man, but he did totally fine for himself, and he definitely did not have no money when he passed away. But he loved duct tape. And he was from New York City, but he definitely had some Southerner in him with how much he loved duct tape and things. And he lived out in the country throughout most of his later life. But for a lot of things, as we'd go through the house, we'd find it and we'd say, okay, instead of just buying a new one, he just put duct tape on it. Or instead of doing this, he just put duct tape on it.
Oh, dear.
And that was to save money.
Yeah.
But at the end of the day, you ended up with a lot of broken garbage that ended up having to get thrown away or was really hard for us to deal with. So I think sometimes people feel the same way. I don't want to pay somebody to help with this. I'm just going to, maybe duct tape this for now and you'd come back to it later and, hope nothing breaks. Sometimes, it is one of those things where it's a more sensitive thing than a lot of decisions are in people's lives because your finances are sensitive. And it's hard to quantify, put a dollar amount on what services are worth. If someone wants to say, oh, well, how much would I save? Blah, 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 blah. Here, that's impossible really to give someone a solid number on. But the overall value, the missed opportunities that you might have in all of those different things really add up over time.
Yeah. Speaking of duct tape, my uncle used to say, if you can't fix it, duck it.
Duck it.
Yeah.
Oh my gosh. That's so funny.
Let me just be clear. You can't fix a retirement plan with duct tape.
Yeah.
Right?
No.
I've never.
No.
We've seen some plans, some not so good plans, but we've never seen a plan with duct tape on it yet. So that's kind of funny, actually.
That's
so
very cute.
Yes. So Luann, I know that we're nearing the end of the show. So I want to go ahead and wrap us up. It's been fun. This is always fun.
Always.
The longer we're on the air together, the more fun it gets. And I do want to give a quick shout out to Graham, my across the table partner here who's helping with the show. I have received a number of compliments on Graham's development, just in personality, his intelligence, his credentials that he has. I can't even begin to just tell you guys how many people have said something to me just in passing at the office. Hey, Graham is doing a great job. He seems really intelligent. So I just wanted to give Graham a shout out. He does a great job. And, lots of people are noticing that as well. And just his personality on the air is great. So we appreciate that.
Well, thank you. Learned from the best.
Oh, all right. Here's you a $20 bill. So, all right. So we're going to wrap it up. If you would like for us to set up a discovery session, please give us a call, 256-937-2010. Again, the number is 256-937-2010 to set up your discovery session. I hope everybody has an awesome and blessed weekend. And remember to serve every person in every situation with a servant heart.
Graham Bauer holds the Enrolled Agent designation, but is not currently offering tax preparation services. Neither the firm nor its agents may give tax advice. Individuals should consult with a qualified professional for guidance before making any purchasing decisions.
Investment advisory services made available through AE Wealth Management LLC, AEWM. AEWM and WG Financial Group are not affiliated companies. Insurance products are offered through the insurance business WG Insurance Services. WG Financial Group is an investment advisory practice that offers products and services through AE Wealth Management LLC, AEWM, a registered investment advisor. AEWM does not offer insurance products. The insurance products offered by WG Insurance Services are not subject to investment advisory requirements. AEWM and WG Financial Group are not affiliated companies. companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only and is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. WG Financial is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. Information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by WG Financial. This radio show is a paid placement.